Welcome back to the channel. I'm Racky Ryan. Today's video is for entertainment purposes only. We have some news that we need to talk about immediately. Some stocks that have been absolutely crushing it over the past year have been cratering recently. A lot of these companies are Chinese tech stocks that are listed on the American Stock Exchange. So I'm here to break down what is going on, why this is happening, and what you can do if you are an owner of these stocks. So make sure to stick around because there's a lot of different companies that are going to be affected by this news. Also, I'm doing the research for you, so all I ask in return is that you hit that like button. So the news is that there is threats of Chinese tech companies and also just foreign companies in general being delisted from the US stock exchanges by a recent law that was enacted by the Securities and Exchange Commission, also known as the SEC. For example, some of these companies that might be affected by this news is going to be NIO, Alibaba, Baidu, JD, Weibo, Pinduoduo, Vipshop, Bilibili, and a whole bunch of other companies that are Chinese, but they're listed on the American Stock Exchange. The reason that I know all of these companies and I'm very familiar with all of these companies is because I used to own them. In the summer of 2019, I bought shares in almost all of the companies I just mentioned. And the reason why I got rid of those shares is because last summer, Donald Trump was talking about delisting Chinese tech companies. Then I really wish I had held them through all of 2020 when they went on a major bull run. In fact, I made a video discussing this and how it was a $50,000 mistake. So after this video, I recommend that you take a look at that so you can at least just laugh at my misery and if you've lost some money recently on these stocks. Okay, so I pulled up CNBC.com. Chinese tech stocks hammered as US law threatens to delist firms from American exchanges. Now, when I sold my shares, it was mostly just rumors and threats from President Donald Trump. Now, there actually has been law that has been enacted into play. So some of the major points is major dual-listed Chinese companies, shares traded in Hong Kong were hammered on Thursday, and they were hammered in the US stock exchanges because they could be delisted from the US stock exchanges. On Wednesday, the U.S. Securities and Exchange Commission adopted a law called the Holding Foreign Companies Accountable Act. Since that law was enacted, Alibaba was down over 4%, Baidu tanked over 8%, JD fell 4%, and NetEase fell another 3%. However, as we speak, those stocks are still getting crushed. Baidu is down 11%, Vipshop is down 12%. Weibo is down 5%, NIO is down 7%, so a lot of these different Chinese tech companies are getting crushed, and this is why. So now let's go back and check out what the law is saying. So the Holding Foreign Companies Accountable Act was passed by the administration of Donald Trump. This means that certain companies identified by the SEC will require auditing by a US watchdog. These companies will be required to submit certain documents to establish that they are not owned or controlled by a governmental entity in a foreign jurisdiction. Chinese companies will have to name each board member who is a Chinese Communist Party official. The US regulator could stop the trading of securities that fall foul of its rules. So basically what this means is if there is board members or if there is any way that these Chinese tech companies are affiliated with China, then they could potentially not be listed on the US stock exchange anymore. And honestly, since China is a communist country and the way that their country is set up, there's probably a lot of influence by the Chinese government into these Chinese tech companies. Recently, you've seen Alibaba with Jack Ma try and basically give them the middle finger and say, we're going to go and do our own thing. But other than that, the majority of the companies are influenced in some way by the Chinese government. That is why you are seeing Baidu go from $300 a share to $180 per share. You're seeing NIO go from 60 all the way down to 35. You could argue that the tech sector is getting hit in general, but I think that these Chinese tech companies are getting hit harder because people have known for a while that this law was probably going to be passed. So we're seeing a much sharper sell-off in all of these Chinese tech companies than we are in just the other tech companies that have fallen recently. So what can you personally do if you own shares of these stocks? Well, you have a few options. One, if you think that this is actually going to be legit, and it is a legit law, but if you think that these companies are going to be delisted, well, you could sell your shares. Two, you could buy put options. Put options protect you against downside in share price. So if you think that the stock is going to continue to go down, you could buy a put option, which would protect you in the sense that if the stock goes down, then the value of the put option goes up. So it's called put protection. You can buy put options. It's a little bit sophisticated. If you know what you're doing, then you can buy put options. Or you can buy stock if you think that this is just really a buying opportunity. So you have a few options. You could buy shares, you could sell shares, or you can protect yourself by hedging. It really is up to you, and it depends on what you think is actually going to happen in the future. What I would recommend you do is do as much research as possible over this weekend and look into the companies that you own. Is there Chinese government influence in NIO? Is there Chinese government influence in Baidu? Do they have board members that are a part of the Chinese Communist Party? That is the research that you need to do this weekend and figure out. And if they do, then maybe you should sell your stocks, or maybe you should buy put protection. But if you find out these companies don't have any government influence, then this could be a buying opportunity. I know this is probably not what you want to hear that you have to do on your weekend, but if you own a big, large position, you might need to do a little bit of homework in order to see what's going on. Because at the end of the day, you're going to want to protect yourself. I want to make it very clear though, this does not mean that these companies are going to be delisted. This purely and simply means that they're going to have some regulations, and the US government is going to make it difficult for them to have any sort of foreign influence, especially from Chinese Communist Party. If you're a shareholder in any of these companies and you have any sort of information that I don't have, make sure to leave a comment below so people watching this can see and you can help others. I'll do research on my own over the weekend, but it also is going to take a community of us in order to go and tackle this. I thank you for being here today. I'm Racky Ryan. If you enjoyed this video, make sure to hit the like button as well as subscribe. I look forward to seeing you in the future.